I passed 4 $100,000 FTMO challenges all the way back in 2021, and it's what allowed me to quit my job and pursue trading full time. In fact, I lived 100% off my trading income using prop firms for over 24 months before launching Lark Funding. And in today's video, I'm going to share with you the exact strategy that I used, and you're going to be surprised that it's simple. In fact, I have always said that I consider myself a 4 out of 10 trader. If I was able to do it, so can you. You don't need anything fancy, any of these crazy courses that people are trying to sell you, convince you that you need. And in today's video, we're going to go over exactly the strategy that I used to, again, pass 4 $100,000 FTMO challenges. Okay, so as we dive into the strategy, I want to preface it by saying that this strategy is the amalgamation of 4+ years of trying to figure out trading. I spent over $10,000 on Forex courses trying to find a strategy that worked for me, worked with my personality. And so this strategy is by no means groundbreaking. You're likely not necessarily going to learn a lot of new stuff, but I want you to know that simplicity is really the key. And I spent over $10,000 to learn that. I always thought that things needed to be complicated, things needed to be difficult, but I have come to learn that if your 8-year-old cousin or your 8-year-old nephew can copy your trading strategy, you are doing something well. And I want you to keep that in mind as we progress throughout this video. If you start to think to yourself, man, this is really easy, good. It should be easy, because the difficult part of trading is not the actual charting. The difficult part of trading is handling your emotions, staying and remaining stoic, of execution, risk management, not letting your emotions get into trading. And so I really want to preface this by saying that simplicity truly is the ultimate sophistication. And it took me years and of pain and misery and struggling to figure this out, and tons of money. And so I hope even for just one of you watching, this can make the difference. And again, this is everything I used to pass 4 $100,000 FTMO challenges, receive multiple payouts, make enough money. Again, I wasn't making hundreds of thousands of dollars, but I made enough money for 24 months to live full-time off of trading. I had no other source of income except for these FTMO accounts. Okay, so that being said and that out of the way, here we have the charts. We have TradingView. Now, this is where 99% of traders start. They go right onto the charts. However, I have come to learn that the very best traders know what the market is doing before they have even looked at the charts. I am a huge believer in fundamental analysis, aka what's actually happening in the real world. It is fundamentals that drive the market, not technicals, okay? The market is not going to have a huge reversal because price hits your trend line, okay? There's going to be a huge reversal because of something happening in the real world. So while you might want to start on the charts, the truth is you shouldn't. You should know what's going on in the real world so that you can develop your fundamental idea before looking at the charts. And when I say fundamental idea, what that is a bias of what is going to happen, both short-term, medium-term, and long-term. And the only way you can say, for example, that gold XAU USD is going to go, say, up for the next 3 months, medium to long term, is for X, Y, and Z reason, okay? It has nothing to do with the charts. Once you can develop that fundamental idea, the charts become so much clearer because you have your bias and now you know whether you're looking for buys or sells. So while we are on the charts and you probably want to get to the charts, no, we cannot. We're going to go through our process of beginning to determine our fundamental idea, our fundamental bias, okay? So first things first, you will recognize this site. This is my FX book. Step number 1, I'm recording this on Sunday, so we're preparing for the new week, is to figure out what are the major news events. Now, there's tons of events always throughout the week, but these are not so important. I really like to focus on just the most important, which are interest rate decisions, inflation reports, and unemployment data. Those are really the holy trinity. That's blasphemous to say, but that is what I want to focus on. Now, I've already done this research, and we have already shared this research with our free newsletter. This is a plug, but please, pitmunch.com. It is the #1 newsletter for traders, completely free. It's the #1 daily newsletter for traders, and so this is something that you should subscribe to down below. However, we broke down already what is going to happen this week, which you can see right here. Okay. So on Tuesday, so as of this recording, we've got GBP employment data, US PPI, and then on Wednesday, the triple threat, UK inflation, European employment, and US inflation data. Now, I want to pull up the data because this is going to, again, help us determine what's going on, okay? So we have already determined the most important news events of the week, which are on Wednesday, okay? We still have we have the UK employment data on Tuesday, which could move the market. You can see here that it is expected to go from 4.4% to 4.5%. Now, that is an increase in unemployment, which is bad news. And again, as of this recording, August 2024, currently we're in a situation where central banks are looking to cut rates. Inflation globally has started to come down, and that means that it's giving an opportunity for central banks to cut rates. Everybody is waiting for these interest rate cuts. In fact, some countries like Canada, it's already happened. On to Wednesday. So we want to look at the US inflation rate month over month. The inflation rate, year over year, July, is expected to go from 3% to 2.9%. Now, again, if you're new to fundamental analysis, we have a huge free course at pipmunch.com in school. It's completely free. What you need to know is that if inflation does continue to come down, interest rates will drop, which means that we're likely to get a weaker US dollar. So as I'm approaching the new week, I'm looking at this and I'm saying, okay, earlier in the week, it's probably going to be quiet because the whole market is going to be waiting to get this data. Everybody wants to know, is inflation going to come in at 2.9%? If it comes in above 2.9%, basically we're screwed because the Federal Reserve will not be able to lower rates, and that's going to send the US dollar skyrocketing. When I say US dollar, we're always keeping an eye on the DXY. Okay, this is the 4-hour chart. So we've had a large sell-off as the market is anticipating those rate cuts. However, I expect a huge spike if we get a print of above 2.9% and vice versa. If we come in way below 2.9%, we're going to see a sell-off in the dollar, okay? So again, I'm saying all of this out loud. I'm thinking out loud to develop my fundamental idea, okay? Most of you, 50% of you have probably already clicked away because yes, this is boring stuff, but this is what makes the difference. So again, developing that fundamental idea. So I go through my FX book, see what's going on, and then I also hop over to Forex Live that has a lot of great weekly outlooks, a lot of news. You always want to look at the session wraps on Forex Live because it breaks down all of the major news events per session, whether that's the European session, the American session, the Asian session. I don't know if I said Asian, Australian, you know what I mean. It breaks down everything that's going on. So again, I integrated this into my trading routine. So I always had a pulse on the market. I always knew what was going on. And it's by doing this, by reading all of these events, over time, I got a much better understanding of the market. And it was through doing this that I'm able to develop my fundamental idea. What is going on? Where's the dollar going? Where's the Canadian dollar going? Where are stocks going? Where's Bitcoin going? And this is going to help my trading, okay? So again, Forex Live, great resource, highly recommend you check that out. Next one is Zero Hedge. Zero Hedge will often have, it's pretty right-wing, but they will often have these deep dive economic reports that I don't really find elsewhere. So I do just like to keep an eye on this. Obviously, we also have CNBC, Bloomberg. These are great places to go do your research as well. Hopefully this channel is helping you get some idea in terms of what's going on as well. And then lastly, okay, I already mentioned PitMunch, our free daily trading newsletter. This helps you stay up to date with what's going on in the market, so you can subscribe down to that below. Okay, so to recap, basically we have 2 to 3 really high impact news events on Wednesday. So because of that, I anticipate Monday and Tuesday to be quiet, and then later in the week, we're going to have some big movements. Now, I am not in the business of predicting what the data print is going to be, but I am in the business of adjusting my trading accordingly based on the data, based on what we get. So again, if I am saying to myself, where is the dollar going this week? Well, I think long term, or should I say medium term, the dollar is going to be weak because we're going to see interest rate cuts. Now, are we going to see that in September next month? Or are we going to see that in 6 months? Nobody knows. But I know that that is the direction that the Federal Reserve is trying to pivot towards. And so that's going to lead to me thinking that the dollar is going to sell off. Now, again, it's not always about what actually happens. It's about what's getting priced in, the pricing in concept. So the market won't wait for rate cuts. The market will move based on expectations. And this is what we're already seeing. This is the 4-hour chart. and we have had a decline of roughly just less than 4% in the dollar. Why? Because traders and investors around the world are anticipating this change in monetary policy. Okay, so that's what I'm thinking for in terms of the dollar. Now, if we go to stocks have been absolutely crazy. Again, stocks are highly correlated with the dollar, so we can't look at any one asset on its own. Everything is interconnected. But if my bias is for a weaker dollar, that could lead to stocks being higher, to stocks going up. However, much of that might already be priced in. If we look at the daily chart, we've had a massive run in stocks, right? Things just don't stop going up. The question is, how much of this is due to the market pricing in those future rate cut expectations? I don't know. So I really want to wait for Wednesday to see that forward guidance, to see how the market's reacting, because really, I'm recording this just after the large sell-off, that large panic last week. So that's what I'm keeping an eye on. Again, when I don't know the long-term idea of stocks or any asset, I'll drop down timeframes, look medium-term, long-term, and we can see on the dollar what my bias is for that. So if you want to have a bias on the pound or the Canadian dollar, you have to do a little bit more research on what's going on there. Canadian dollar, for example, the Bank of Canada has already cut interest rates this year twice, so that's bearish for the CAD. You can see here pound CAD has been going up, so obviously a weaker Canadian dollar. Okay, so obviously I could speak hours and hours on how to develop a fundamental bias, a fundamental idea. It's something I myself am always trying to improve on. Again, I'm like a 4 out of 10 out of this, not 10 out of 10. The point is, you don't need to be a 10 out of 10 trader or analyst to make money from trading, to get funded, to pass these challenges. I like developing an idea, a rough bias for what I expect to happen, because it helps my trading out tremendously. At the bare minimum, if you take one thing from this video, it should be that just avoid high impact news events. On Wednesday, we're going to have a ton of movement in the market. Just avoid trading on Wednesday. You'll thank me later. It's way easier, way less stressful, and you will do much better. Okay. With that being said, I want to hop into some charts now to show you how I approach the market, because it's remarkably simple, yet remarkably effective. I like trading the higher time frame. So when I'm charting up on Sunday, I will always start with the weekly, even the monthly chart. The monthly chart you can check at the beginning of the month. Really what I'm looking for on these higher time frames are moving averages. What is the market doing? Or on the higher time frames, where are the moving averages and where is price in relation to those moving averages? So for example, on the weekly chart, we're currently hitting the 100 EMA. Okay, so I jump back and forth between EMAs, SMAs, they all work. I like the 50, 100, 200, and the 800. Now you'll see that the thicker ones are the daily ones. So again, I like just having as many as possible. I think these are the strongest. The 800 particularly is strong. So you had looked last week when price came down and everyone was freaking out, oh my gosh, pound's crashing, the yen super strong. You would have seen this weekly 100 EMA and you would have said, perhaps some support here. And now, because we have this weekly view, we're able to say, interesting, looks like pound yen might be on some support. I need to do a little bit more research to develop my fundamental idea, my fundamental bias. However, this is looking bullish based on this wick print. This is looking bullish for this week. Next up, what am I going to do? I'm going to throw on my fibs. Okay, so we haven't looked at this yet. However, I'm a huge believer in fibs. Keep it simple, 38, 50 level, and the 61.8. I'm always looking at these across timeframes. Okay, so I know really this is not too important. Okay, we're getting a bounce off the 38, even though we had a lot of drawdown. So I'm going to remove this, keep it simple, keep it clean. But I am looking at this level right here, which does coincide with the support level around here. Okay, let's jump up now to the daily. Again, I just want to keep an eye on this. I'm probably going to delete it, but I want to just keep an eye, keep it in the back of my mind so I know what's going on. Okay. So this is why it's interesting. On the weekly time frame, it's looking bullish, but on the daily time frame, it's now looking bearish. We had a large sell-off, and now we're starting to retrace. So again, do we take buys? Do we take sells? Well, it always brings us back again to our fundamental idea. What are we thinking? Now, the yen is a safe haven asset. Investors and traders around the world will flow into the Japanese yen when things aren't looking great, which is exactly why we had this sell-off in the pair last week. The yen was getting stronger because of the fear of recessions and and stock market selling off around the world. Okay, so is that going to continue? Well, I really need to wait for Wednesday to find out what's happening in the US with inflation, because that is what's going to dictate market sentiment. So as you can see, that really everything is so connected. You can't have anything separate on its own, which means, however, that there could be an opportunity to both buy and sell. If we get inflation at 2.9% or even less, I want to be buying pound yen, okay? Not as many traders are going to be flowing into the yen if we're going to get those interest rate cuts, my opinion. I want to be looking at buys. However, let's say inflation comes in higher than expected. I know that traders are going to flood into the Japanese yen, and I'm going to want to sell. Again, you could say there's the carry trade aspect with Japan, US. That's a whole other thing. I don't want this video to be hours long. So again, there's research you have to do for each currency. Okay. However, we have this support level in the back of our mind. Next, straight up, I'm going to throw on this fib level here, and I can already see there's a great potential setup at this 38 fib with these two. It's the daily 200. So I'm going to throw this on here. Now, I should probably back up and I should explain that the whole concept of my strategy is stacking confluences. I want as many confluences as possible. All I do is I throw them on, I look for an area that has multiple confluences, and I will throw a pending order on there, and I will take the trade. It is as simple as that. So I will use moving averages, I will use Fibonacci levels, I will use key levels, psychological levels, I'll use trend lines. I believe that's 5, and I believe that's everything. I haven't put on the key levels, and I haven't put on the psychological levels. That's something I usually do at first, but again, because I don't want this video to be insanely long, I haven't. But you can see here, 190.0 is a psychological level, a round number. Humans, we love these round numbers. And you can see right here, that is lining up perfectly with the 38. So if you look at this level, at this area, what are we looking at? How many confluences do we have? Well, we have a psychological level / key level. You could still consider that one. We have a 38 fib retracement level. We have the 200 daily EMA, and we might also have fundamental backdrop to support it depending on what happens on Wednesday. Okay, so that's 3 to 4 confluences. For me, when I was taking my challenges, I always looked for 2 to 3 confluences on the daily chart or more on the 4-hour. You can drop time frames, is up to you, but the lower the time frame, the less strong the signals are going to be. You're going to get more trading signals, but they're going to be not quite as strong. That means we're looking at roughly 4. So I'm going to throw this area on here. I'm going to make this red because red is for a sell, and this is what I'm looking at. Now, what I'll usually do is I would throw on a text box. I would say 38 fib. I'll do round number for 190, 200 EMA, and that's all we have right now. Okay, so I'm going to do this, put it on here, and now if you want, what you can do is you can get rid. You want to make the box as accurate as possible, so we want the box to start right at 190, and we want it to come up to the 38 fib, and the moving averages will stay on there, so we don't have to remove those. And if you want, boom, we could remove this, and now we have our area right here, and we know why. Because of the box, we don't have to wonder what's there. So what I would do is I would set a pending order. I can even do that here. I can show you. I would put it here. I put it just a couple of pips below the actual first confluences. So just a couple of pips, 2 pips, 3 pips below 190. I want to put my stop loss just above the last confluence. Actually take the size of the zone and I multiply it by 1.5. Again, there's all kinds of videos on this channel explaining this more in depth. You can join our school community completely free. Would like to help you guys out as much as possible for free. But I calculate the size of the zone, and then I want to put the stop loss above that zone. And then in terms of take profit levels, it depends on the fundamental idea, the short term, medium term, long term. But I would try and always get minimum 1-to-1 risk reward. 2-to-1 is ideal, and I would target, the previous level. So if you were to hold it all the way, this is looking to be roughly 3.5 risk reward. I likely would not hold the entire position down to this level. I would take profit along the way, but that is how I find a setup. Now I want to show you one more example. Again, I don't want this video to be too long for you guys, but let's look at another example. This is the daily chart on gold. You can see here that gold has been hitting a ceiling for quite some time, 24.50, and gold is very strongly correlated with the value of the dollar, DXY. So you simply cannot effectively trade gold without following the DXY. If the dollar is dropping, gold is going to go up, and vice versa. So as we backtrack and think about what's coming up for the week ahead, We know on Wednesday we have some inflation data, which is very important for the outlook of the US economy, which means I think gold is going to be very quiet up to Wednesday. Wednesday could get a little crazy, and then Thursday, Friday could be the days when it is time to take a trade. So if we're looking at the daily chart, we can see here that we're riding this 50 EMA. The 50, we're riding that as a support. If we look at the weekly chart, I think there'll probably be a decent wick. You can see there is a decent wick here on the weekly chart. So again, keeping that in the back of my mind, we're also riding the weekly 50 SMA. Again, this is where I would throw on all of my round number psychological levels, right? So I'd throw a guy on here and then I would see, okay, where's the closest round number? Probably 24.75 is really a strong area there, along with 24.8. I would maybe move it up to 24.80. I would probably put this white. Again, I would go down through all the levels. We have another one here. I try and get as many touches as possible, and I want to bring it to the round number. So then double click 24.25. That looks pretty good. We have the wick touch here. That's looking pretty good. Okay. So, and then obviously if I throw one more on here, we have one here, 23.80. Zones, they're zones. They're not, a fixed set hard price. It really is a zone. So you can see here that we're really consolidating. We're jumping around a little bit. I don't love to trade zones like this. I want a clear fundamental picture of what's going on. And really the beautiful thing is, if you don't know what's happening in the market, you can look at the charts and you could say to yourself often, oh, the market also doesn't know what's going on. When we have a period of consolidation, it's because the market is waiting for more data. It wants more information, which is exactly what's happening. If we look here, this is for the last month or so. Literally about the last month, we've just been moving sideways. So on a small time frame, 15-minute, 30-minute chart, I'm sure there's been lots of opportunities, but in terms of actually developing a solid position in the market, there hasn't been a lot of opportunities. So in that case, I would hop down to the 1 hour. We can hop down time frames. Again, the quality of these setups starts to get diminished, but I am just looking for areas of multiple confluences. Where do a lot of things start to line up? And is there a reason that the fundamental landscape could line up with that? I like to clone these, but doesn't really line up. Okay. If we had a reason to enter a buy, let's see here. If we throw this fib on, we start to get a retracement, maybe around here with these moving averages. I'd throw this box on here just to keep an eye on it. Make it purple or kind of like indecisive for me. If it's green, I know it's a buy. If it's a red, I know it's a sell. What I've found when trading prop accounts and trading personal accounts, you name it, whatever it is, the most important thing is to wait for the A+ setups, to be patient, to be disciplined. The majority of the money is made in the market in just a handful of days, which is a hard pill to swallow. You want to make money every day. You want to be trading every day, but that's not the reality. Really, you can avoid 90% of the common mistakes by just being more disciplined, by not taking weak setups. Wait for the solid setup. So have patience, have discipline, and it'll make the biggest difference ever in your trading. Okay, so if you made it this far, I really, really appreciate it. If you could please subscribe to Pip Munch. It is completely free. We are building the #1 newsletter for traders. It's a daily newsletter. We keep you up to date with what's going on in the market, prop firms, strategies to pass, all that good stuff. So please subscribe to that down below. We also have a free school community at Pip Munch, completely free. We have a course that goes much deeper into detail here. And as always, if you have any questions, please drop them down below. I will do my best to get to them. And as always, your support is appreciated. And we will see you in the next one. Peace.